Hey there, this is Tamir from Fibonaccis-Traders.com with a daily educational video. In this video, I want to take you on a quick look at my journey since I started trading 6 years ago until the trader that I am, a full-time trader using only Fibonacci retracement tool in combination with candlestick analysis, aka price action. So let's get into it. Why do I use only Fibonacci and candlestick analysis? Let's answer the question, before we go into why, let's answer the question of what are we traders looking for every day that we sit in front of the computer, we sit in front of the charts. The only thing that we are looking for is the optimized entry for a position at the time that we are now. If we want to go long, is it the time now to go long? If we want to go short, is it the time to go short now? And of course it depends on the time frame that you are trading. The 5 minutes, 15 minutes, the daily, the weekly, what kind of traders are we? What is the best time frame for us? This is for another video I will make soon. But if I'm looking to go swing trader, I'm a beginner trader, I want to go swing because it's much easier to be a swing trader. It's much less riskier than to be a day trader. So I'm looking for the best indicator or indicators that will give me what I'm looking for. And as trader, I'm looking for an indicator to give me an indication to where to put my position, where to put my stop loss, where to take profit, or even if I have a winning position, is it good time to add to this winning position? So after 2 years of learning, exploring and digging to find my way and the best strategy for me, I just stopped and start really breaking every indicator, the most famous, the most common indicators out there, and to break them into pieces. Is this indicator really fits me? Is this indicator really gives me what I'm looking for? Let's check. For example, we have the 8, the 20, the 50, the 150, and we'll put also the 200 just above here. So let's take a look at the 8 EMA or MA, doesn't really matter for this example. If I want to go long and I'm looking at the 8 EMA, I want to go long above the 8 EMA. I will put my stop just below the 8 EMA. Again, what is just below? $1 below, $2 below, $10 below. What is just below? This is for another video I will make soon. For this example, just below, let's say below the previous candle. If I go long here, price, and the price touches here the 8 EMA, the 8 EMA throws me out because this is my stop just below the 8 EMA. And then I go long again here and it stops me out here. So all the way up, I got stopped out at least 2 times. And if I want to go short, so I go short below the 8 EMA. So if I go short here, at this point here, after this candle closes, it closes below. I go short and it throws me out just above here or even here. And then I miss all this downside. So the 8 EMA doesn't really help me and doesn't really give me the answer of what I'm looking for. Now let's check the 20 EMA. Same story. If I want to go long, I go long above the 20 EMA. Got stopped here, which is good because now price goes down. But here I go long again. Stopped here and price went all up to here. Also, if I want to go short, I want to go short below the 20 EMA, so I go short just above it, just here or here, and I will get stopped out here or here, which is good, but again, it doesn't really gives me the consistency that I'm looking for. So I don't use the 20. Now let's see the 50 EMA. If I'm looking at the 50 EMA and I look back, because this is how I want to check if something is working, I need to look left. I cannot look right because there is nothing on the right. So I look left, and if I go long and manage the position according to the 50 EMA, I will get stopped out several times all the way up and will miss the majority of this uptrend. Also, if I go short below, I will get stopped out several times and miss the majority of this downtrend. So I don't use the 50. Now I have the 150 and the 200, very common, two EMAs for the long term, because they take, the 200 takes 200 candles and make an average, and the 150 takes 150 candles and makes the average of the closing price. But if I look left, they are both very similar in their move, so I need two of them. Let's just get rid of the 200. Let's stay with the 150, and let's say that the 150 really holds all the way up and somewhat gives me good resistance on the way down. So for now, let's leave it like this. We have the volume here. We all know the volume. And we have the RSI. RSI is a relative strength index. Relative to what? To itself. If I have a RSI for this SPY, so it gives me the relative strength for the SPY for itself. So if RSI goes up, so the SPY also is in a strength momentum. If RSI goes down, the SPY is in a weak momentum. But I can look on the candles and I can see it on the candles. So why do I need another line down here to show me what I can see here? And another thing, let's talk about the oversold and the overbought. Overbought, here it's overbought. So if here it's September 20, it's overbought. So if I'm long on the SPY, and even if I'm investing and I'm not trading, I'm a long investor in the SPY, and I got out here because the RSI told me, listen, it's overbought, it's time to sell. So I missed all this. Also, here it's oversold, and here it's oversold, and here it's oversold, but still price keeps going down. So also the RSI does not give me what I'm looking for, so I don't use it. Now I'm with the candlesticks and the 150, but where do I enter if I want to go long or short on SPY? And let's say I don't have any position now. Do I go long? Do I go short? Do I wait until the 150 price action closes above it? So if I didn't go in from here, I missed. Not lost because I didn't get in a position, so I can miss 10 or 11%. Also here, I've waited until price closes above the 150, went long, and got stopped. Also here. Also here. So it doesn't really give me what I'm looking for. So I'm not using also the 150. And let's get rid of the volume for now. And let's get back all the EMAs. And let's talk about price is heading towards the 50 MA, price is heading towards the 150 MA, price is going down towards the 80 MA. So let's put it this way. Price does not follow anything. All the indicators and everything is following price. Now think about it. If price really follows the moving average or follows any other indicator out there, why don't we see the indicators in the future? Because one simple reason, indicators in their formula have price. The moving average, whether it's the 200, 150, 50, doesn't matter, 500, the two EMA, it doesn't matter. Until price does not close and we don't have a closing price on the session that we are looking, in this case daily, if we go to monthly, so the 50, the 8, the 20 cannot get their final value until we get a final value for price. Everything follows price. So I will teach myself how to follow price, because to look left I can see where price came from. Our problem as traders is what to do next, where price will go from here. And this is where Fibonacci comes into the picture. If I want to go short on the SPY, because I can see that SPY came from 480, went all the way down to 350, and still we have a downtrend. So I take Fibonacci, swing low, swing high to swing low, and it gives me exactly, I will do it slower, swing high, swing low. It gives me exactly all the resistance area to the upside. If we have this bounce and bounce will continue to the upside, it gives me to the point, to the point, to the point. Now if price from here goes down and breaking October 13 lows, it will give me all the support areas, levels that I need to the downside. And how do I know how to really trust these levels? All I need to do is look left, and I can see that this level which Fibonacci gave it to me, I look left and it gives me this area here, and it gives me this area here, that if I go further left to September and August 19, it was the peak of August and September 19. Fibonacci gave it to me. And it also gave me almost the COVID lows. So I can trust Fibonacci to give me the most accurate support and resistance areas for price action into the future. And of course we need to learn how to use it, because if Fibonacci is not an indicator, it just gives us the most accurate support and resistance level to the future, whether it's for the long side or for the short side. Of course, we need to figure out how to trade it in combination with price action, aka candlestick analysis. Okay, we can also do it on the line chart. We take swing low, swing high to swing low, and it gives the perfect to the point. And if we look left, to the point, to the point, to the point. And if we look down to left, we see it gives us almost perfect to the point support and resistance to the future. And again, we need to learn candlestick analysis in combination with the Fibonacci. If you're looking for a simple swing strategy, check the link that I will post just right here. Check it out. And if you like this video, let me know any comments on this video or any other video on my channel. Thank you for watching, and I'll see you in the next video.